Hey Kimmy, what's up?
Can you hear me?
I hear you loud and clear.
All right. How are you?
I'm doing great. I was doing a little gardening earlier today, lifting buckets with mud and grass and stuff.
You're a total suburb guy now.
Totally. I mean, you listen, you stick a city kid in the woods and give him a shovel and some buckets, man, I'm out there for hours.
They have to keep you busy somehow, don't they?
That's right. So listen, Kimmy, I appreciate you joining me for a little happy hour fiesta.
Oh, thank you, thank you.
Oh, what are you drinking?
So I don't have alcohol at home.
You don't have any alcohol in your... Oh my God, Kimmy.
I thought I'd make it cute. It's Gatorade.
Oh my God, you're ridiculous.
In it.
All right, folks. So listen, Kimmy and I have been friends for a long, long time. I mean, we've been friends for a decade, I'd say.
Yeah.
I don't know if she'll admit that, but from my perspective. So guys, Kimmy's a badass. She's slinging every day. She's in there in the trenches. So I'm going over charts. I'm looking at some of these stocks and I'm thinking, these are Kimmy stocks, the ones that we keep talking about. So ladies and gentlemen, Kimmy Sokoloff, thanks for being here.
Oh, thank you for having me. I appreciate it.
So what are we trading? What is, Kimmy calls her stocks her friends. So
I know, they're my buddies. I try to stay, within, I always monitor the same universe of stocks, start my day, I look at the SPYs, the Qs, and then you go from there. And then you try to see, I'll always look at an Apple and Amazon and Google and Netflix, you always look at the big, the big kahunas and everything.
Yeah.
But then, and then you pull in other things, I'll look to see if things are forming bases, like 2 weeks ago, Tesla was forming a nice base and it looked like it was ready to break out. So, if you could pull it up and look at the chart.
Yeah.
I don't know if you want to or.
I'm happy to.
Or I don't know if I could share my screen. I don't know how
you can share your screen. You want to?
Yeah, how do I?
You see where it says share screen? They make it really easy for us.
Okay. So if I pull this, if I do that, can you see that or no?
Not yet.
You know what? Maybe because I have two screens on.
Yeah, but I'll ask you which screen you want to share.
It didn't do that. Let's see. You know what? Maybe I'll hit this off. Hang on one sec, JC. I'm going to do something. There we go. Let's see if it'll share screen now.
Kimmy, when we get done with this coronavirus stuff, I'm gonna go take you out and buy you a proper cocktail. This Gatorade stuff is not gonna cut it.
I know, right? Well, obviously I hit share screen again and I only put my one thing on, but it's not coming through. I don't know.
Well, if you want, I'll share mine. Here we go. And
yeah, show me a little.
Yeah. So do you see that?
Yeah,
so
a little
Tesla. Is this the base you were talking about?
Yeah, like in there. It was a nice little base. I was looking for a gap fill up here, like roughly in the. Where was that gap? Like around 890 or so?
Yeah.
Yeah, so I was looking in there, right? Was that around there? So you see in here, like back in like early May, well, June in here was like, it kept trickling around 800 to 820. It was bouncing back and forth, and finally it had a nice little breakout.
Yeah, so how high do you think it could go?
Oh my God, I mean, you hate to keep saying, but I don't know, it looks pretty good. The stock gets overbought and then it pulls in and then it has a nice move. Then it keeps, maybe like you drew that little support line, maybe it pulls like in a little bit more and then has a nice little pop again. But in here, it looks fine. I mean, everything, I mean, it just looks healthy. It looks okay. I mean, I would have to see on my little chart, hang on, I'm going to look at something out here. Yeah. I mean, listen, the stock could go up to like that, 1150 if it wants.
1150, yeah, that seems like a pretty good target. Let me ask you this: what is it that you're looking for when you're finding these stocks? Like, okay, so you whip out Tesla. So we're talking about Kimmy stocks, and the first thing you whip out is Tesla. Like, of course, Kimmy's trading Tesla. Like, that doesn't surprise me one bit.
Yeah, but then look at Boeing. I mean, so then if I'm always one like if you're in a stock and it has a nice move, take profits, take money off, right? I don't know why it won't let me host disable participant screen sharing. Oh, that's why I can't do it.
Oh, so that's on me?
Yeah. That's why I kept hitting OK, thinking it was. So
here you go. Okay, try now.
All right. Main share.
There we go.
Okay, so now can you see if I have a
Yep. Perfect.
You could see even over here in the corners or whatever. You see
see
over here. So I use stochastics a lot. Okay, so I look. Okay, there, of course, there's RSI, there's MACD. People look at volume, and volume's a great, indicator to use as well. But I love to enter trades a lot of time, or to enter a position if you want to go for daily, weekly. You see stochastics down here. It was very oversold, literally like on Monday. It was really oversold. The chart was looking great. You could see over here too.
Yeah.
And I mean, the stock, let's see if I move this over. I mean, the stock was down here roughly at 176, and it came above. I use moving averages.
So what are those moving averages, Kimmy? Explain to me what those are, because I'm not Mr. Moving Average. So talk to me about what you're doing.
I am. So I'll use for short term. Like in here on Monday, Boeing came back above and rallied above the 8-day moving average, right?
Okay.
And it closed on it. And to me, being oversold, it was a good opportunity to potentially enter the stock. And what happened Tuesday, it opened up huge. I mean, it went as high as 208, but a lot of times when stocks gap up, it could pull in, which exactly what it did. So to me, if you bought the stock, let's say Monday, where it closed at 191 because you wanted to make sure it held the 8-day moving average, let's say in here, right? This is my 8-day. Yep. So say you bought the close, let's say at 191 or 192, and you come in and the stock opens up, let's say it opened up at 207, and you sell the stock and you take some profit off the table because, I mean, look at that move in that stock in an overnight move. And a lot of times when you have huge gap ups, a lot of traders will say, I don't love the gap up because if it doesn't hold the pattern within 5 to 10, 15 minutes, odds are it's going to come down and fill.
Yeah.
Right?
And then, Kimmy, what I love about this is that the way you're looking at the markets is so different than I do, right?
I know. You're very big picture. I need to work with you.
Well, I'm looking at you, and you have multiple indicators down below. I'm certain I don't look at any of those. I look at RSI, but then you have the moving averages. So talk to me about why you chose the 8-day moving average, and what are those other moving averages?
Okay, I'll use the 8-day, the 21-day. Really, I use the 8-day, 21-day. Those are for shorter term. And then I'll use long term, the 50-day and the 200-day.
And what's that white one?
Oh, that's the Bollinger. These are Bollinger Bands.
Got it. The whites are the Bollinger Bands. Got it.
The whites are the Bollinger Bands. I have extra moving averages on here, like the simple versus exponential, which I should take off. I really use a more simple moving average, but it's really the 8 and 21 day. You always look to see if, like here, let's get the SPYs, okay? Okay, like throughout, let me move you over. It's very hard to see, but can you see this yellow line?
Yeah.
Here's the 8-day moving average. Throughout this whole trend up from early May, around let's say May 19th, all the way up to, June 8th, it hugged the 8-day moving average, meaning if you could have stayed with the trend.
Yep.
There's no reason ever say to short the market, okay? Because you're staying with the trend as if you are, let's say, a shorter term, which that's not short term, being in it, let's say.
It is for some people, it isn't for others, right? It's different for everybody.
Right, but from May 18th to June 8th, and it's riding the trend, and then we gap down. I mean, it was a good, and then look, you could see up here, it came up to the top of the Bollinger Band, right? Now, follow this down with MACD, RSI, and then stochastics. It was overbought. So if you were in this, it's good to tell, if you're dealing with institutional clients, or you're dealing with retail clients, you tell them, okay, maybe take some off the table, let it breathe, and then if we get a nice dip, you could come back in. But if you're a long-term investor, you don't touch this stuff. You know what I mean?
Yeah. And let me ask you something else, Kimmy. So can you go back to the Tesla chart?
Yeah.
Yeah, I would love to.
So here's I was very frustrated in here. I was like, God, this is so boring. It's so boring, I'm like, this is really boring. So that's what a pattern is. It's a consolidation. And then it sits in here and sits in here and sits in here. And I'm going to show you another one. And all of a sudden, boom, there it goes, right?
And then hold on, Kimmy. And then how do you manage risk? Talk to me about what your strategy is. Like, let's say you're wrong, right? Let's say you're in a stock and it's just not doing what you think it's going to do. Like, when do you get out? Like, how do you decide, Kimmy got this one wrong, we need to move on to live to fight another day? What's that thought process like? Right.
Well, I mean, but it really depends on each person and what their risk parameters are, right? You can't say, like, if I'm talking to a portfolio manager, their risk parameter is going to be different than an individual, right?
Fair.
So I will look at, if there's a client you're working with and he's short term, I'm going to tell him, we're going to ride the 8-day up, and we're going to see, I'm going to be, you might give like, maybe like, Tesla has big moves, right?
Right.
So it might stay in the stock even though it drops 10, 15 points. You know what I mean? So every stock is different, right? But because Tesla could be up 9 one day, down 30 the next.
So an institutional client will look to accumulate more on that weakness. So the strategy isn't so much manage risk, it's hey, right, we can own more.
Hey, we could own more. Yeah. Right. Like, okay, so
that's the plan going in. Like, hey, we're gonna get involved. And if it happens to go lower, we're gonna get to buy more. And that's the strategy. But that going in.
Right. I mean, and this is a market, you have the Fed back in this market up, right? So every dip we have is being bought. So, it's like, look at what was the day? It was like, what was it, Monday? We dipped down. And then, so here, can I share a screen again?
Yeah, here.
Oh no, you disabled me. I just want to show you real quick on the SPYs. Good? No.
Yeah, go for it.
Okay, so sure. Okay, so over here too. So here's the SPY, right? We dropped down at the end of last week and we based in this area. Now Monday was a huge reversal candle, okay? See this candle right here? See this line? This is the 200-day moving average. Right in here, this huge candle, we engulfed the prior day and rallied back. The SPYs rallied back above 301.27 right in here. To me, it was like, buy. It was worth a shot. Can you guarantee it? Of course not. There's no guarantees in life. It could have went down the next day, but that's the risk you take in anything with regards to
it. Just amazes me how much information you're able to consume. But I get it. Like there's just so much going on here. So hold on. So then how do you talk to me about the oscillators down here? So I have a surprise. I have special guest. My friend Joe Fahmy is going to pop in and say hello. I didn't tell you. A little surprise. Okay. I don't know if you guys know each other, but you guys would get along just fine. So before he pops on, talk to me quickly about the oscillators that you have under there. What are you looking for? What are you waiting for?
You mean down here?
So stochastics, RSI, MACD.
Okay, so on Monday, on the 15th, here we go. We ignited. We reversed intraday. Okay, we reclaimed the 200-day moving average at 301.27, and here's my stochastic, very oversold, touching down by the 20 level. To me, that was like, buy. Pick stocks, anything that you think, with SPYs, Qs, IWMs, and what did we do? We gapped up huge. We went from 301 close up as high, yet,
Does that crossover mean anything, that one of the lines on the stochastics crossed above the other? Is that what you're looking for?
Yeah, yes, you want them to cross, almost like MACD and RSI. Well, like MACD, sorry.
Yeah.
MACD, not RSI.
And then is this a slow stochastics or a fast one? You know how there's two?
Yeah, no, but this is full. So it smooths it out. There's fast and slow, and then stochastics full, almost like smooth. It smooths everything out, so it's not whippy. You know what I mean?
Fancy, Kimmy, with your oscillators. You're so
My
fancy.
cute little oscillators. So this is like during my career, like most of my career, I worked with portfolio managers, right? So they have, let's say I have hedge funds, so they could be a little bit more active versus a mutual fund manager, right? So intraday, they might say, okay, what do we do and how are we making money intraday? And this is the things that I would look at. Okay, you get a crossover right in here on this day above the 200 moving average, roughly where it was at 301. Let's start buying. Let's start buying the market. Let's buy his Qs or, whatever else, what sector he covered or was in, so.
Interesting. Okay, then, all right. So right on time.
Yeah, I see him on CNBC all the time, but I don't know him.
Joe Fahmy, he's a long-time old friend of mine. He trades similar to you, looking for momentum, short term. And I was talking to him today. I'm like, hey, Fahmy, and me and Kimmy are going to be talking later today. You should pop in, say what's up. Let's see.
Is he his own?
There he is.
There I am.
Joe.
How are you guys?
Hi,
What's
Joe.
up, buddy?
Hey, Kim. How are you?
Good. Never met you. Nice to meet you.
Nice to meet you too. JC, how are you?
Salute, brother.
You're always drinking. That's a good thing.
I know I'm the other.
This is happy hour. Kimmy's drinking Gatorade.
I can have alcohol at home. I'll let it on.
So Kimmy's one of my favorite traders, Fahmy, and
I thought I was your favorite trader.
Yeah, well, I like it for different reasons.
I'm his favorite female trader. No, I'm joking.
All right, that's fair. That's fair.
I quote Fahmy all the time. I'm like, listen, a wise Egyptian man once told me that if you trade the averages, you're gonna get average returns. I got that from you, bro.
You'll end up average. Yeah, exactly.
So where'd you learn that?
I don't know. I pick up stuff from all over the place, but maybe I don't know. I don't know where. I think I came up with that one on my own, actually. Usually I steal everything, but that one I came up with on my own.
All right, listen, take credit for it. What the hell? So, you and I, we learned from like everybody who came before us. So like we give credit. Hey, I got this from so-and-so. Sometimes you come up with your own shit. Own it,
Once in a while, yeah.
Way to make
so
someone in.
What do you trade, Kim? You trade, JC says we trade similarly. So you trade growth stocks or what do you trade?
Yeah. Like I'll go for the Googles, the Tesla, Bank of Boeing. I will venture in and out like Roku,
Okay.
I'll look at like Workday, I'll look at Square, SQ. And I'll also, when the financials got moving, I'll get involved in financial stocks, all that stuff. So,
okay.
You go where like what's moving.
So what's hot and what's moving?
But I don't do the crazy things. Like, I know everyone's talking about that, like, like all these like stocks that have done nothing and up 1,700% in one day.
Oh yeah, no, I get you. Sorry.
Like I don't do stuff like that. That scares me, and I've been doing this a long time. I'm like, yeah, you can have it.
What's your time frame? Are you day trading or like swing?
No. So I work with some clients at the firm that I work at. So I'll do more like swing day. It depends. The pattern holds, the chart holds, the stock holds. It really depends. Like I try to look for a few day move, like 2, 3 day, 4 day move.
Okay.
Make money out of something. Like, this week was prime example. A lot of things didn't hold. Let's say if I went into a Boeing or made a recommendation in a Boeing, it crossed a certain level and had a nice rally and it popped Tuesday, but then it faltered. It just reversed. Okay. So like this week wasn't a great week. You also, was it option expiration? Isn't it triple witching? So it's a little. How about
you? Quad witches.
I think it's quad. End of the quarter is quad. Yeah.
So what are you seeing, Fahmy? What are you seeing out there?
I manage money for clients. I trade anywhere from a few days up to a few months. So that's sort of a swing. When someone says they're a swing trader, I think there's like 10 definitions in there because I don't know exactly.
Right. Someone might say, oh, wait, you only in it 2 days, 3 days, 4 days. I'm like, oh, okay.
Yeah. So it's anywhere. I mean, it's if I trade something for a few days, it doesn't mean I was planning to. It just either broke down on me or popped so nicely that I'll take the profits. So, but I'm trying to hold a few weeks to a few months in that range. Mostly growth stocks, combination of fundamentals and technicals. So a little bit of the William O'Neill IBD blueprint with a little bit of my own flavor from 21 years
Right,
ago.
what's the sprinkle with a little Fahmy sprinkle?
With a little bit of my own, extra toppings, with my own flavor in, from doing this 20-something years.
So what are the ham and pineapple Hawaiian pizza telling you these days? What are you seeing out there?
This is a pretty damn resilient market. This is incredibly resilient. I think people are I always like to look at the positives and the negatives. One of the biggest positives is there's no distribution from the big institutions. So I keep track of that every day, every week, because at the end of the day, it's not the individuals that control the markets, it's the big institutions that do.
How do you track that? How do you track that?
I just look mainly on the NASDAQ Composites, my go-to index, and I look at it every day, and I try to keep track of accumulation or distribution days. So if it's an up day on higher volume than the previous day, or maybe a down day on higher volume than the previous day, just to day by day keeping track of distribution and accumulation, because you don't really get a top historically in the market till you get a group of distribution days in a 3-4 week period. So right now there's 2 distribution days on the NASDAQ in the last month. So that's telling me that the institutions are not just buying the stuff that they bought in April and May, but they're holding on to it.
Buy more on weakness. We're seeing that, we're not looking at the NASDAQ composite like you are. We're seeing it in our own measures, but I couldn't agree more. This is a Fahmy market. This is how I look at it. Like when I see markets like this, I think about this. I'm like, oh my God, Fahmy must be crushing it, because I understand the pattern. I've seen you give your damn presentation 100 times. I could tell you the same jokes you always give. And the
JC knows all my jokes. They're so old now. I can't even tell them anymore.
New material, Fahmy. You need new material.
I need some joke writers, because mine are getting kind of old.
So what are you seeing? Give me a stock.
Give me a stock.
You want me to pull up a chart, or what do you want me to do?
Hell yeah, pull up a chart, man.
I'm talking to 2 technicians.
Pull up a chart.
Maybe I like your microphone.
You like my microphone?
Yeah,
all I need is one mic.
It's like old school.
Us fans out there.
So really quick, just to show you what I'm looking at on the NASDAQ, and the reason I use the NASDAQ versus the S&P is because 1, it's the leading index. 2, because it's about 3,000 stocks versus 500 or 30 in the Dow Industrial, so it's a larger sample size. And 3, because it's where a lot of the big winning Apple's and Amazon's big winning stocks come from. So that's why I use the NASDAQ. I love the Russell, to be honest with you, more than the S&P 500, because that's an area of risk appetite, but that's a whole other story. So I'm looking at something like this week. I'm looking at, I don't even know what day it is. So Tuesday was an up day on higher volume.
Taco Tuesdays, Fahmy.
Taco Tuesday was an up day on higher volume than the previous day. So that's an accumulation day. I look for these so this red line down here is the 50-day moving average of volume. So I look for the bars that stick out above that. And only here, which was actually, let me reset the lines. Last Thursday was that ugly day when the Dow was down like 850 points or whatever. That last Thursday was whatever it was. Yeah, like 2,000 point, whatever it was. And then so last Thursday, and then 6-4 right here was another distribution day, meaning a big down day on heavier volume than the previous day, and then last Thursday, which was June 11th. So those are 2 down days on heavier volume than the previous days. So to me, that's about it in the last month. So it's okay in an uptrend to have selling pressure and have some profit taking along the way. But as long as there's not a cluster of it, then I think the trend's pretty strong.
Hercules, give me a stock. Hercules.
So then really quick, AYX is one I love. I love software. I love enterprise software. It's one of the leading groups. AYX are involved in so many things. Subscription revenue is great, and automation, AI, and stuff like that. Some sharp money own it. So I know you guys don't look at a lot of fundamentals, but I do like their earnings growth. I do like their revenue growth, and I look at daily charts and weekly charts. I know
as long as you like it, Fahmy. As long as you like it, that's all that matters.
Good.
Yeah, so it's just a great uptrend, and then it had this sort of big, huge double bottom base, if you want to call it, on a weekly. And then, so I like to make sure the weekly's strong, and on the
Is
daily,
that the Wu-Tang pattern? Is that what that was?
That's the Wu-Tang. and then on the daily chart, it just sort of cleared this range today. So I mean, that's one of the ones I own and one of the ones I like longer term.
Right.
Go back to that weekly. Go back to show me that Wu-Tang pattern. Is that a Fahmy patented? Did Method Man approve that?
This is straight out of Staten Island pattern, yeah.
Straight.
I like
36 candles instead of
exactly. I like the double bottoms where the second W undercuts the low of the first W, because that's a true double bottom to me, because it shakes out the weaker hands. So everyone who sets their stop at the low of that first level, the market, I love to say that right before the market or a stock takes off, they tend to shake out the weak hands and create some doubt and screw with everyone. They kind of just like, all right, we're going to F with everybody and then screw all you, and then we're going to take off. You know, like a perfect.
That's like gold. Gold does that a lot.
And basically any asset class, a stock, a market, or whatever, that like right before it takes off, like
I know. It messes with you.
Like Brexit's a perfect example. When we were coming out, this is the S&P weekly, when we were coming out of this big range, right before we took off, we had this big shakeout with Brexit, and then the presidential election. These just sort of quick shakeouts before we take off. I don't trade much gold, but I trust you when you say, gold does the same thing. So that's sort of my, I don't know. That's.
I mean, it'd be nice. I say it's like, everything looks intact. Nothing looks bad in the market, but it would be nice to have a little bit more of a pull in, like a nice little healthy, even down to the 2,700. I'm just going to use the S&P.
Okay.
As a relative basis, like.
Why would it be nice, Kimmy? Why would that be nice? Tell me why.
I don't know. I mean, it looks like the market looks like it wants to break out. I mean, unless something unforeseen happens, right? I mean, the market looks fine. But like you see, like that 27 level, like just to come down in there and fill it out more, and then maybe rip up.
I would be okay with the 50-day. So the way I look at the S&P is the red line's a 50-day.
Okay, yeah.
So the way I look at the S&P is you have these accumulation days. This is a daily S&P. You have these accumulation days off of the lows. And then my read on it is, let's say this range, 2750 to 2950.
Yes.
So you go sideways there, but when I look at it, look at all this volume here. This is what I mean by the institutions launched it off of the lows and barely gave anything back. Obviously, we oscillated in a range. So from here, we broke out and retested, sort of, if you want to call it. But if we hold this sort of right there, this 50-day, which I would be okay with a move down to that range. But as long as we hold that 50-day, I think
that's where we were early this week, really.
Correct.
Basically.
Yes.
Last week.
27. Let me ask you, why are you looking at 27? You want to undercut this range that we were just in, or why are you looking at that number?
Maybe to fill out more, just fill out more, be a little bit more. But I'm going to let price tell me and dictate, because that's what I do as being, technicians. I'm not, you can't say what you want. And
so maybe like to round out the pattern, something like that, maybe.
Yeah, and then head all the way up to 4,000.
That's what 2010 was like. That looks like
4,000. I love your aggressivity, as Magic Johnson would say.
Market's going. I mean, it might as well just be there.
Kimmy, I'm with you. 4,000.
3,400. I mean, the rate we're going, we'll take out the highs in the S&P the way we did in the NASDAQ. And the NASDAQ looks like it's going to just rip right through 10,000, right? So.
All right, you two, let me ask you this. You got a couple of bulls, right? All junked up, drinking the bull market Kool-Aid, Fahmy trading his growth stocks in this, Fahmy market, totally Fahmy market. Kimmy's having a ball. I know that for a fact. What's it going to take for you guys to be like, you know what? Feed the ducks. Let's raise some serious cash. Kimmy, I'll let you go first. What's it going to take for you to say, whoa, I'm out?
Okay. And then maybe put some serious hedges on. I'm going to say around if the S&P breaks below the 2,900 level and stays below it.
Yeah,
You
okay.
gotta stay below it. I'm going to give that as my level to say, okay, I'm going to lighten up in certain areas or be a little bit more protective with your capital. I'm going to give it like around, I know, we're over 100 points higher or whatever.
Yeah,
or
still
200 points higher, but meaning I'll just use that level, because if we do that, then we're going to fall back into the pattern between that 2750 to 2950 level. We could, not saying we go to 2700, but maybe we fall back into that sideways pattern, which people are referencing like 2009 a lot, like, saying, oh, we just bumped here, then broke out, but then you could come back into the pattern too.
Yeah, I was looking at 2950 is what I had in mind, but probably for the same reasons as you. It's a range, it's like that range. What about you, Fahmy?
So you're saying if we broke below that range and stayed below?
Yeah.
Okay, I would agree with that. I mean,
there's 2950. Well, no, because Friday, we broke below, the futures were trading at 2920. So really, we were down there just like a couple days ago.
Yeah, no, I would agree with that. I mean, there's two things I never argue with: the stock market and women, because they're both smarter than me and they're both always right. So I'm agreeing with you on that one. But for me to get bared up, I would say that same level, because it's funny you say that, because that coincides with a break below the 50-day. To me, the 50-day or 10-week, that's an area of institutional support. So like I have a friend who manages like $2 billion. He doesn't even look at charts, but the only thing he has on his charts is the 50-day. Because
I have it here too.
He just knows if we're below that, it's not good, and if we're above it, it's usually good. So I agree with you. If we broke below that, because it's theoretically an area of institutional support, if that would tell me the institutions are not supporting the markets. And then of course, a cluster of distribution days. And if the big, I love, like Jesse Livermore says, if so goes the leaders, so goes the markets. So if those FANG names started to break down, I think, if Amazon has trouble, Google has trouble, Apple, Microsoft, then the market's probably going to be in trouble.
Right.
So that's what I would look at.
Yeah, there you go. Right in there, that 2,900 level, JC.
Yeah. Those were the highs in 2018.
Oh, it's not bad. Like, you see that support in your chart down in here. If we drop to 2,700, I mean, yes, people are going to panic, but if you level off in there, it's not terrible.
You might be right about kind of what I talked about, maybe a shakeout. Maybe we do have, some point this summer, I don't really know or care what the reason will be, but some point this summer, maybe we do have a shakeout, and then before we take off, just to create doubt and keep the bulls in check. I'd be open to that. I mean, it could happen.
But why again, if you're trading the averages, what you're trying to be average? What's the quote, Fahms?
I don't know. You're paraphrasing. Yeah, if you want to be average, trade the averages.
There are stocks breaking out of consolidation. There are stocks breaking out of big bases.
I don't even look at the S&P levels, and it's no disrespect. I'm looking at my stocks. I'm looking at the leaders, because I'm mostly looking at individual stocks. And I've been watching the tape. I've been watching the tape 21 years. It's pretty damn resilient. And you know how I know it's resilient? Because a lot of stuff I'm buying is going up, and I know my hit ratio, it's not that good, and it's been pretty solid. Number two is the stuff I'm getting stopped out of is turning on a dime and going higher, which sucks, but that tells you how resilient things are. And number three, the stuff I'm not buying that's on my watch list is also working. And I know I'm a decent stock picker, but not that good. That just tells me how strong this market is. So
you make such a good point of watching your behavior and watching what's happening. You're being rewarded for doing certain things, right? A month ago, we were like, listen, guys, our longs are working great. Our shorts suck. We can't make money shorting anything. That was information. You know what I'm saying?
My friend's had some shorts on his hedges, and he's like, this is, they call it the risk to aggravation ratio. He's like, I am aggravated. He's like, my longs are great, but his index short, he's like, this is aggravating the shit out of me, is basically what he's saying. And it's just frustrating being short, but that's not an opinion. That's just listening to the market. One of my favorite quotes is, don't focus on what you want the market to do. Focus on what it's actually doing. And so what we wanted to do, of course, I'd love a pullback and exactly like you said, things to round out this summer. But
you can't.
Right now, I mean, I don't know, like that Nasdaq's holding that 21 EMA. That's which in strong uptrends, strong stocks and strong indexes hold that 21. So
you can't fight it.
There's some perma bear out there, like who's super long gold that's just shaking his head like, look at these. Look at these.
With everything in the world going on, I don't think anyone really expected us to come back. To the level we were at in February. You know what I mean?
That's information,
Everything
Kimmy, isn't
in
it?
The world, but
isn't that information?
What?
That's information that we can use.
Oh yeah, but it obviously the power of the market and the Fed stopping it, but also but you just have to let price tell you. So it's like, people are like, oh, I can't believe it. And then, I have never been good at Elliott Wave. So, but I hear some Elliott Wave people expecting us to go down to 2,200. I don't know if they're thinking,
they're always
I don't know Elliott Wave. I was terrible at it. I'm surprised I passed it on the CMT exam,
I don't think it's on it anymore.
No, but JC, I took the CMT 15 years ago. I'm a CMT a long time.
So, all right, Kimmy, let's end on a good note. Kimmy, what's your favorite restaurant in New York City?
It's closed. Who's my favorite restaurant?
They're all closed.
Come on, let's look forward to when they're opening.
Well, it's like everything's takeout. Let me think. Go to Joe.
Mommy, what's your favorite restaurant?
I have to give love to Hunt and Fish just because I know the people there. So as far as ambiance, great food, Hunt and Fish.
You're really going Hunt and Fish? Favorite restaurant?
Not best restaurant, but my favorite just because it's like my Cheers where I go in and I'm like Norm and everyone knows my name.
Well, I'm going to do a local restaurant that's local down by me. So it's amazing Mexican. I know. Listen, I love Italian. Will always be my favorite Italian steak, but a great Mexican place and local in Battery Park. It's called El Vez and it's phenomenal. And the margaritas are killer.
Kim, JC is my personal Yelp. I don't have Yelp. I call JC and I ask him. And
he's everything.
It's amazing because I will literally be like, I'm on 30, whatever, and 8th. And what he's like, oh, there's a Peruvian restaurant there. There's an Ethiopian. There's a steakhouse. And I'm like, how do you have this photographic memory for? And he's like, there's a Starbucks right next to that dry cleaners and there's a Peruvian place. And I'm like, Starbucks, dry cleaners. I'm like, how does he know this? So my question to you, JC, is what's your favorite restaurant?
On Goldbelly, I just ordered Prince Street. So I had Prince Street Pizza delivered to me last week. Does Prince Street
Pizza count as a restaurant? Because if it is, it's my absolute favorite.
Does a pizzeria isn't that a restaurant by definition? Yes, right?
I was thinking like sit down fancy.
Minetta Tavern.
Oh, that's good too.
I love Minetta Tavern.
Great burgers.
Elio's Italian, Upper East Side. That chicken francese. Woo!
What about the Pizza Adrian's on Stone Street?
I like that. I do like that a lot.
Where is that one?
Stone Street, Adrian's Pizza.
I haven't been to that one.
I went there hungover quite a bit amount, way back in the day. We have, we're like this. And the burger next door over at, what's the one on the corner? Harry's.
Harry's, yeah.
Burger at Harry's. Woo! After a rough Thursday night, that's a good Friday lunch.
I'm ready to go to a restaurant.
No, I'm Midtown West Side, so there's a lot of 9th and 10th Avenue. There's tons and tons of restaurants there. So
so you're in the city too.
I'm in the city. Yeah.
Let's go to Rails. When are we going back to Rails?
Oh, I've been there. That's fun.
That's quite the experience.
All right. Well, listen. Can we make a pact, Fahmy? By the way, I really appreciate you stopping by.
No,
Kimmy,
thanks for having me.
Of course, always a pleasure. When can we make a pact that the three of us are going to dinner and we're going to feast and rap about the market and argue and discuss? Can we agree?
That's perfect.
Perfect.
All right, guys. Listen. Thank you for being here. Cheers.
Thank you. Great meeting you, Kim, and thanks. I have water, so.
You guys see what I'm dealing with? You see what I'm dealing with?